Well, hello and welcome to another trading week right here in Lagos, Nigeria. The first full trading week of July after a tough trading month of June, where the market shed about 13 trillion naira. That's for the whole month of June. I guess it's the first negative month this year so far, even though the market is still up about 40% or so. But what do you do as a savvy investor with this? Do you buy the dip or do you wait for more dips? I guess that's a decision you have to make at this point. And you need your financial advisor and you need to do your own research at this time. But let's get a check on what's playing out with energy markets. Now, we're seeing they open the market lower. I guess it's also a bad month for oil. That's for June, and it's kicking off July, the back foot, 1.19% lower for Brent crude. We see Brent holding on to that $70 level just by a little bit there. WTI crude, $68, about 1 cent, 0.96% lower. So, definitely we're still tracking sell-offs right there. The shorts are still winning right there for the oil market at this time, looking at what's playing out with Brent and WTI coming from the month of June, and it's all on the back of the developments with the Strait of Hormuz and the U.S.-Iran war so far. So I guess kind of negative for government revenue and for the oil producers at this time, but positive for those that buy fuel. That's us at this point. If you're going to the fuel pumps, we should see lower prices, but we're expecting, the prices to match, the drops we're seeing in the oil market so far. So hopefully we'll see more, of that, more drops at the pumps with what we're seeing with, the oil market so far. All right, let's get a check on how your money performed. That's for last week. That's for the trading week. Last week was down about 1.21%. Extending the losing streak for a third consecutive week there, 229,240 points, 1.21% lower. And we see the market cap there, 147 trillion, losing most of those levels where we've been used to for a while now. Let's look at the volume, 3.82 billion. That was what was traded, valued at 154.39 billion. That's for the whole trading week last week. And we did see losses in, blue chip companies there, dragging that the index down. Deals 258,567. That's for the whole trading week. Let's go to other parts of the market now. We see for the counters that we track, banking, 3.72% lower. The biggest drop, though, that was for industrial goods there with a big 4.93% decline. Oil and gas, 4.34%. I guess it's a no-brainer at this point. Tracking what we're seeing with the global oil market, and we're seeing that play out with the oil and gas counter. Consumer goods, the least decline there, 1.60% lower. Not as big as other counters, and insurance, financial services, 2.52%, tracking what played out with the banking counter so far. So at this point, what do we expect for July? Is July going to be that recovery? I guess we'll definitely find out. Sterling Financial Holdings Company with top trades there, Axis Holdings, that's also financial services, and we see Otedola Hotel PLC, also the top trades. That's for the whole trading week. Last week. All right, keep it here, on Business Morning. We're going to find out where the dip is for the NGX and, when you should, try and get back in, to the market at this time. Top gainers, Airtel Africa. It's a sleeper, wakes up every now and then and, comes with a 10% gain. It gained 21%. That's for last week, closing at 5,274 naira per share. This was stuck at the 2,000 naira level for the longest time, but we're finally seeing moves there. Regency Assurance PLC, 20.25% for the whole trading week. UPDC also showing up there, 12.31%. But you can see the gains not as big as what we're used to when you have a positive trading week, just managing about 21% gain there. All right, let's look at the laggards for the week. Now, we see International Energy Insurance PLC, 18.83% lower. Nichols PLC, 18.60% lower for the week. What do you do with these big drops? Could it drop more? We'll definitely find out this week. All right, that's it for the markets. Let's get to other stories now. In business, African thought leadership is gaining, greater recognition on a global stage as business publications from the continent continue to earn, international acclaim. A Nigerian businessman and investor, Mr. Femi Otedola, has added another milestone to that growing profile with his memoir, Making It Big, Lessons from a Life in Business. winning second place for the African Business Book of the Year Award at the 2026 Business Council for African Awards. The recognition highlights the increasing global relevance of African business perspectives and the role documented entrepreneurial experiences in shaping future business leaders. The award-winning memoir chronicles Mr. Otedola's journey through entrepreneurship, investment, and corporate leadership, while offering insights into strategy, resilience, governance, and long-term value creation. Since its release, the publication has attracted widespread interest among business executives, entrepreneurs, investors, and students of enterprise across and beyond Africa. The latest recognition reinforces the growing international visibility of African business literature and its contribution to conversations around leadership, innovation, and economic development. All right, so the stories now. Definitely, we're still getting reactions to the latest by the IMF, and we see Mr. Taiwo Otedola saying no secret spending outside budgetary approvals. The federal government, they're dismissing the claims that it spent more than 8 trillion naira outside the approved budget, insisting that all public expenditure is carried out within the country's constitutional and legal framework. The clarification follows recent comments linked to the International Monetary Fund's 2026 Article 4 consultation report, which suggested that public spending equivalent to about 2% of Nigeria's GDP was not reflected in recent budgets. The Finance Minister and Coordinating Minister of the Economy, Mr. Taiwo Otedola, says the government does not operate a shadow budget, adding that all spending is authorized through appropriation acts, statutory transfers, and other legal mechanisms approved by the National Assembly. I would say the drive to accelerate intra-African trade as we see the major boost with the Africa Continental Free Trade Area Secretariat signing a 20-year public-private partnership with Budgetary Security to implement the AfCFTA Customs Modernization Project. Speaking at the signing ceremony, the Comptroller General of Customs, Nawale Adeni, said the initiative will enhance interoperability by connecting customs administrations to a single digital platform, streamlining cross-border trade, improving efficiency, and advancing trade facilitation across the continent. Take a listen.
Common tariffs are not enough. You would need the tools, you would need the right tools to push the agenda of modernization and trade facilitation. And this is what we have just witnessed. In our modernization journey, we've had a number of service providers, most of them foreigners, most of them foreign countries. They get into our ecosystem, they get those big contracts to modernize customs operation, give us capacity, train our people, but what we get at the end of the day is not what is given in the agreement. But now we have a Nigerian company that has come to join us as partners, that has developed systems that is working, that is very effective, and that is actually complementing our modernization program.
To make sure that our custom systems are interoperable and that they are easily understood by economic operators. And as the Secretariat, we have been observing all of the excellent work that has been done here in Nigeria. I'm very happy that Comptroller General is with us because we looked at the model that was developed here to modernize custom systems, place them on digital platforms, ensure that revenue collection is optimized. All of these advantages that accrue from digitization and modernization of custom systems. Today, as we speak, Nigeria is benefiting from the deployment of these technologies, and from our point of view, the continent has a lot to gain from the model that was introduced here in Nigeria. So that's why we signed the MOU today.
All right, there you have it. More moves there, trying to get Africa to trade more with Africa. We'll definitely keep tracking trade with Nigeria and other African countries going forward. We'll take a break now. When we come back, we'll look straight at manufacturing in Nigeria. How did it perform in the first half of 2026? And what can we expect in the second half? That's in a moment. Just stay with us. Now to our first conversation. Nigeria's manufacturing sector, we're entering the second half of 2026. It's faced a familiar dilemma with while inflation has eased somewhat, exchange rate volatility has moderated, and economic growth has become more stable. Manufacturers insist the industry's biggest problems remain unresolved. So far, from shrinking access to credit, persistently high borrowing costs, to policy inconsistency, energy expenses, weak consumer demand, the sector continues to operate below its potential. Yet there are also signs of cautious optimism as government capital spending, infrastructure investment, and regional export opportunities that's beginning to show some sign of improvement. So as the first half of 2026, has it laid the foundation for an industrial recovery, or are manufacturers still trapped in a low growth cycle? Well, joining me for this conversation, we have Mr. George Onofowokun as the CEO of Coleman Wires and Cables and chairman of the Manufacturers Association of Nigeria, Ogun State chapter, to tell us how it's been so far. Great to have you on the show, sir. Good morning.
Good morning, laddie.
Yes, sir. And a little birdie told me what's your birthday. Happy birthday, sir.
Thank you very much, laddie.
How does it feel celebrating another birthday?
You're going to get me in trouble now on the national TV. I tell you, everybody's my birthday. Well, anyway, it's good. Anyway, we thank God every day, and another year is something to thank God for. So for me, happy times.
Happy times.
Happy times.
And I'm sure your body feels great. Regardless.
Surely.
Fantastic. It's good to have you. And definitely it's been quite an interesting first half.
Yes, it has.
Of 2026. And we still have the big question, at this point. When we're coming into 2026, we all had a particular vision.
Correct.
For 2026. I believe you had a vision for your business. You had expectations.
Yes, we did.
What's the first half been like so far for you?
I think the first half has been, as you said earlier, very volatile. I think one thing is that we all came into 2026 with this lovely, fantastic optimism that, look, the economy is getting stable, things are going to go right. But nobody took the account of there's going to be a curveball. And the curveball, we all know what that is, the Q1 curveball, which is the US-Israel-Iran war. It threw the whole world into a tailspin that I think the whole world wasn't prepared for. And that literally triggered inflationary push everywhere in the world. Strait of Hormuz getting tightened up. Oil went from a $60-70 barrel to over $120 a barrel, and shipping costs went up from a 40-foot container, $3,000 or less from Asia to Africa, became over a quarter, $6,000-7,000. So for every business, cost in terms of import of raw materials, import of anything, literally went out of the roof. Inflationary push in Nigeria started going up again, though stable in terms of petroleum products starting to increase in price. In the inflationary push from transportation, from logistics, all created a push on food and movement of logistical food in Nigeria. And so invariably to any manufacturer, it became a shock that was unexpected, but had to be dealt with. We have no choice. We all live in this world, so whatever shocks you see, you have to remodel over your strategy to actually fit in to this. So I think that was the biggest shock for us. I think Nigeria is a bit lucky in the sense that we got a little bit of policy right in terms of petroleum with the Dangote refinery. So yes, we saw pushing prices, but we didn't see queues like any other countries that were in queues for days to try and get petrol. But that allowed us a bit of ease of the shock that would have been a bit more worrisome if we had not had some level of safety. Take for the good part of fiscal policy that's been done right, and also macro policy that's been. I think the macro policy has really saved us also. Reserves at an all-time high of over $50 billion meant any instantaneous shocks from any exit in terms of short-term funds, FPIs, was not seen. So Nigeria has got it right in the last 2 years when it comes to macro policies. So our finances are stable, FAC is getting better, but it means that investments can still be put in because nobody worries. As I said, I'm MAN chairman and I sign off every new member in MAN. And if I look at it, Ogun State, which I always say is the most viable state in terms of manufacturing sector, and we're almost like the booming state. So I see more of, and I look at it every month in, month out, I'm signing new members. And for you to be a member of MAN, you must be functional, fully running. You should most likely be running a year or two before you can even apply, because there's no application in MAN that for a paper manufacturer. We have to inspect your working, you have to show us your number of workers, show us your books for you to apply to us to become a MAN certified member. And so if we've been signing over 10, 15 averagely every month or two new members in, something is good still happening. Yes, it might be the proportion. The only part I always look at it, where the proportion of new investors coming from. The sad part is that they're foreigners. But it's also a good thing. It just shows confidence in it. So if I look at it, out of almost 10 new members we're putting in, I'll sadly say almost 70% are foreigners.
70% foreigners. Wow. But looking at the capital importation data, we did see $152.3 million. That came into manufacturing Q1.
Correct.
2026. That's the latest data, so far. Up about 17.2%.
I think
year on year.
Yes, Nigeria is now the destination. I think based on, let's just be factual and take off the rigmatas of all our issues. We are one of the most stable economy in the last 1-2 years now. Yes, we got things right. We had to take a hard knocks harmonization of the FX position, which got our macro policies right, subsidy removal, which got the leakages that literally were just bleeding if you were making money, and the rest of the country was literally bleeding and suffering. So those circumstances have been taken off. What I see now is that there's a lot more confidence in investing. The key thing is that, are we able to drive in the investors? Now we are. The only thing I see now is that we need to now work on getting the indigenous also to be supported. Because look, let's be sincere, the foreign companies have easy access to funds. They've got cheaper rate of fund. If you look at today, what is NIBOR, what is SOFR, it's less than 3.5%. So if you're getting SOFR plus 2%, you're at 6% maximum. But in Nigeria, we're at 26.5%.
Quite tough for Nigerian manufacturers to compete.
It is tough, and so, but the lucky thing is that we have banks like Bank of Industry, which sincerely have always got it right. A bit getting it wrong today. I have to be. Sometimes we have to call them out when they're getting it wrong. Interest rate they're pushing up, and the reason I see that is that they need to get more support from both the government and the central bank. It's not entirely their fault. The cost of fund is getting higher, but they're being able to source. So we're moving away from a 10% BOI fund to a 15% BOI fund. I'm sorry.
10 to 15%. That's a BOI fund.
Yeah. So
Wow.
so it's not factual. We all keep quiet about some of these things, and we think it's okay because the excuse everybody's using is okay. Interest rate is 26.5 for MPR, which means outside factor. By the time they put their spread, or you're taking out the discount, it's ranging between 24 and maybe a 32% interest rate, depending on whether you're retail, commercial, or large-scale corporate. Although large-scale corporate, I think, is tailing down a bit more now. But what we need to see is that we cannot accept in any way that government would allow BOI to be seen like a commercial bank. It's a driver for manufacturing. It's a driver for real sector growth. And if that is the only thing they keep right, and they've done it right for so long, successive governments, we can't get it wrong now. No matter what interest rate we've seen over the last 20, 30 years, I've been in Nigeria now, going almost 30 years. I've not seen a scenario where BOI has totally moved away from its conceptualization or its focus, whereby we are looking at a place where there's a 5%, 6%, whichever happens. The task of BOI from both the Ministry of Industry, from the government, from central bank, is to enable real sector patient growth, patient money.
Well, what do you think will make the BOI actually raise its rates? What could it be?
It's basically they're not getting the right funding mix, which they should be. And when they even have access to it, from what we gather, they're not getting access to it from central bank, from some of those funds they've been able to get. And so, yes, because central bank is also managing its inflationary position.
The central bank is tightening.
It's tightening. But a central bank has to also remember, and the government has to, it must come from two sides. Both the Ministry of Finance and the central bank must come together and help BOI. I think where BOI is not using enough of its willpower is to use the manufacturers to fight its own policies, to actually fight, because telling us today it's okay that 15% is fine, it's not acceptable. I totally tell them it's not, and I'll say that to my dear friends at BOI, it's not acceptable. We cannot go over the 10% mark, and we should see that BOI is a contributor to growth, and it has contributed to growth. Take that aside, apart from BOI, we have to look at other areas of key things that the manufacturers need to see. Which we both broke a hair with the 1st of January fiscal policy, which was the best thing they've done, that any government has done in the last almost 5-6 years, is getting that, and now it's been implemented because the 90-day window, 1st of July, implements that fiscal policy reform. And that is seeing we see a lot of impact in the industry in terms of duties zeroed out on all machinery, irrespective, chapter 83, 84, 85, and 90, where at least that impacts machinery at zero duty. That we have to do. And it's something I've always advocated here, that look, you cannot expect manufacturers to be paying duty on trying to enable employment. I don't see the reasoning for that. So that has helped us. So we have to commend where the fiscal policies are getting it right. Now, what we didn't have before was a balancing act between macro policy and fiscal policy, which is your macro and a micro. Now, where we are now going is that we're seeing a far better balancing act between the fantastic work being done on macro policy and a lot more better work now being done on fiscal policy in terms of the macro policies. So kudos to the new minister, who is really hell-bent on fighting for us to rebalance fiscal policy, and he's doing a good job. It's in there a short while, but nevertheless, we're seeing a lot more, I'll say, youthful gear towards it.
It's nice when you just start and we start to see direction.
We need to see
where you're going. All right, so how confident are you? I guess the Naira has given you confidence. First half. Going into second half, I guess we're good.
Believe me, I think we're where the central bank wants us to be. The 1.34 to 1.4 maximum. I think that's where I see us being throughout this year. It has greater stability. It means a lot of us can make projections. Means businesses can actually project their cost to sell, and also project their import or their capex. It's a lot better for us to have a stable naira than too strong a naira or too weak a naira. So let us know where it is. Eventually, this is where I see the naira going, and this would not happen in 2026. Most likely, you're going to see it between the 2027 quarter 3, quarter 4, and 2028, where we start seeing a naira appreciation from where it is, because there's nothing we can do. The currency will continue to improve, the reserves will continue to improve, the earnings of the government will continue to improve. But the impact, what we need them to do is to make sure two things are there for the manufacturers, the long play. We need patient funds for the industry as a whole. We also need consistency in policies where fiscal policies are now being matched by the right macro policies from the central bank. And as long as we keep that consistent, yes, we have the elections coming, but I do not see that much of a shift in where we are going in terms of inflation, in terms of the naira position over the next 2 quarters. If, and this is a blessing for this country, we survived quarter 1, biggest shock, and we're able to enter quarter 2 with inflation at 15.69, 15.8. It's incredible that we managed that. And look, as much as we have these over 200 million people who all want to strive to do well, God in His infinite mercy seems to be just pitying us and finding a way for us to track our way into a better path. It's early days from that half-year difficulty, but I see positive stability, and if you read everywhere, everybody sees positive stability. And this is the time, and I employ Nigerians, this is the time to see manufacturing as your long play. Trade, we're good at it, but the manufacturing sector is our long play. And this is the time as a country, as a people, as individuals, to put our long play into it. And for the rest of us that are already in it, this is a time we spend our time mentoring and motivating those coming in and those in it to see our success stories as something they can achieve. And I think if we do that, we would have a country that we're all proud of in the manufacturing sector, and we would have a government that is totally focused on getting the manufacturing sector for Nigeria to be the industrial hub. And that, I think, is a take out of H2 for me, half year of 2026, is that the country is now, I'll say, we've grown. We've basically taken the heat from our mistakes and spent the last 2 years literally repositioning. Are we there yet for the whole economy? No. We still have a long way to go because this thing has not trickled down. And we have to be sincere. Has it trickled down to the Joe Bloke on the road? It hasn't totally. But everything is time. Rome was not built in a day. All this takes time. I don't expect, I've not seen any economy that has been turned around in 2 years, or even in 5 years, even 10 years. We talk China, it took 30 years for them to be top in the world. And this was a country that was 144 in the world. Nigeria was better than China in 1980. Now, but it takes time. And we need to have that patience to actually allow things to work and be positive. That irrespective of these infrastructural deficiencies that we see, we need to see the positive end of it. Because if we don't, we will keep seeing 70% guys from outside Nigeria seeing the opportunities, while we keep seeing the problems.
Yeah, we all need to see the opportunities.
We need to see the opportunities.
Foreign and domestic investors and all of us here, working week in, week out to get that money. Thank you so much, sir. Always great to have you, and definitely we're hoping that all the indicators work in our favor, going into H2. Thank you so much for coming on today, sir.
Thank you.
Happy birthday again.
Thank you very much.
All right, in a bit to present, updates, collect feedback, concerns, ideas, build transparency, and ultimately ensure effective implementation of Nigeria's national policy on marine and blue economy. The Federal Ministry of Marine and Blue Economy, they've held their second quarter 2026 Citizens and Stakeholders Engagement Meeting. The event, which took place at the Eco Hotel, Victoria Island, had in attendance the Minister of the Ministry, Mr. Otedola, and his team of officials, other heads of agencies, as well as members of the public. Take a listen.
This is a high-level convergence of stakeholders drawn from across Nigeria's maritime and governance and economic ecosystem. Participants include senior officials of the Federal Ministry of Marine and Blue Economy, heads of agencies, political leaders, directors, port operators, civil service representatives, civil society organizations, and other critical stakeholders. The meeting serves as a strategic platform to mobilize subnational governments toward effective implementation of Nigeria's marine and blue economy policy. The welcome address highlights the ministry's progress so far, as well as its growing collaboration and productive partnerships with state governments in advancing maritime development.
The ministry has made remarkable progress in institutionalizing the performance management system, embedding a culture of accountability, result-based management, and service excellence across its departments and agencies.
Goodwill messages follow, with stakeholders lending their support to the policy framework, which several speakers say aligns closely with President Bola Tinubu's renewed hope agenda. In his remarks, the Honorable Minister stresses that policy without implementation cannot deliver meaningful development. He therefore calls on all stakeholders to commit to actionable steps that will drive sustainable economic growth.
History teaches us that transformational policies succeed only when they are embraced by all stakeholders. The national policy on marine and blue economy has already been acclaimed as a bold and visionary framework for harnessing Nigeria's vast aquatic endowment. Its successful implementation, however, depends on robust collaboration between the federal government, state government, and the private sector. No single institution can accomplish this task alone.
The keynote presentation titled Driving Private Sector Investment and Industrialization in Nigeria's Marine and Blue Economy, Opportunities for Sustainable Economic Growth is delivered by Aliko Dangote, President and Chief Executive of Dangote Group.
Execution is the central challenge of this era, and execution in the marine and blue economy domain remains one of the things above all else. Coordinated, sustained, and strategically directed private sector investment.
To share his thoughts with us on this important.
Governor Doye Diri also speaks, underscoring the significance of the marine and blue economy to Bayelsa State's development and long-term economic outlook.
Our blue economy pursuit has also inspired a bold road infrastructure agenda to open Bayelsa State to the Atlantic Ocean across our 3 senatorial zones.
The engagement ends on a collaborative note, with stakeholders reaffirming commitments to deepen partnerships, drive investment, and ensure that Nigeria's marine and blue economy policy translates into measurable national development.
Well, after years of operating in regulatory uncertainty, Nigeria's digital asset industry appears to be entering a new phase. The Securities and Exchange Commission have expanded their regulatory incubation program, admitting 7 additional digital asset firms into its accelerated regulatory incubation program. It's another significant step towards creating a formal framework for crypto trading and digital investment services. But beyond regulation, bigger questions remain. Can clear rules attract institutional investors? Will they strengthen consumer confidence? And can Nigeria position itself as Africa's digital asset hub while balancing innovation with investor protection? Joining me now is Ayotunde Alabi, Chief Executive Officer, Luno Africa. Great to have you on the show. Good morning.
Having me. Good morning, Ladi.
So, good morning. Looking at Nigeria's regulatory timeline, so far, 2021 started off with CBN restricting banks from facilitating crypto transactions. 2022, SEC publishes the digital asset rules. 2023, CBN allows banks to work with licensed digital asset firms under conditions. 2024, SEC launches Accelerated Regulatory Incubation Program, that's ARIP. Then we're here now, additional firms receive approval in principle. Walk us through this now. Is this the most significant milestone yet for Nigeria's digital asset industry? Approval in principle, that's not a license, right?
No, yeah, so it is not a license, right? But it is a signal that Nigeria's digital assets, regulation has moved from conversation to execution. It is no longer, what we are thinking, or, we're sort of like redefining and clearing the air around the gray areas that, very many firms have operated. The ARIP process is now, indicating that there is a process that is continuing into what will now become a fully licensed regime. For many years, as you've mentioned, the industry operated in an uncertain environment. What the SEC has now done through the ARIP is create a structured pathway where serious operators can engage with the regulators or meet defined standards and build within a supervised framework. It also shows a clear shift in approach. We are moving away from blanket restrictions like what we had with the CBN in 2022 and uncertainty into a more collaborative model where regulators and responsible industry players can work together. And this is very important because Nigeria should not push this industry underground. We should bring it into a regulated environment, protect consumers, and attract credible operators who are prepared to build for the long term.
All right, for viewers who may not understand the difference, what does approval in principle, what does it actually mean? And what still needs to happen, before firms receive, full licenses?
Well, so the program, the essence of the program is to give the regulators the requisite understanding of how operators, operate and the processes within this industry, right? So approval in principle is indicating that you have our approval from the SEC to operate within a defined framework at this time, right? Upon successful completion of this process, by which time the regulator, the SEC in this case, would have understood your processes, would have been able to ascertain that the processes and the way that you conduct your business is not putting consumers at risk and is in line with global best practices, then you can now be moved into the actual licensing regime. But again, because the industry is just, is a new industry, and so we don't have the full licensing regime yet because players are still going through the ARIP process, and the SEC, the regulators are also still understudying the industry to understand the overall ramifications for not only the capital markets but the economy as a whole.
Okay, so tell me, how does regulatory certainty, because that's what we're driving for, at this time, how does that change the investment landscape for digital assets? Do you think this industry is still getting the attention, from investors, so far?
Yeah, absolutely right. Nigeria is moving from when it comes to the crypto industry or digital asset industry. Nigeria is moving away from retail speculative trading into a bit more infrastructure and use case led, industry from a digital asset perspective, right? And so from an investment perspective, right, a lot of institutional investors are on the sidelines. Were on the sidelines initially because the institutional investors like the asset managers, the pension fund administrators, the foreign investors cannot come into an industry or cannot effectively play in an industry that lacks regulatory framework or lacks a pathway to regulation. So right now that landscape has changed, and it's changing because we are beginning to see a bit more participation and pragmatism with respect to the regulators. For example, early this year, late in H1 rather, the CBN also released a sandbox, right? Just to reflect that the approach from regulators is no longer pessimistic. It is a bit more open-minded. Regulators are beginning to be a bit more open-minded. The same thing with the SEC as well. The SEC has been, forthwith, or have been the front runners with respect to, accommodating this industry and trying to define what regulation and responsible participation would mean. And right now, so these are all indications and elements or signals to investors to say Nigeria is taking the lead. Nigeria has, the responsibility to define, what regulation or how responsible participation would be. Definitely.
Sorry, I have to, cut you short there. For our viewers on DSTV now, we're joining the live coverage for the Nigerian Army Day celebration. But on other platforms, you can continue following the conversation and follow the money right here on Business Morning. Thank you so much, today. Definitely, when it comes to digital assets, crypto, it's one industry that's struggled so much with scams, and all of those fraud cases, so far. Does it solve this issue? When it comes to digital assets and crypto, the scams, they're always there, at this point. But does regulation help in any way?
Absolutely, it does. The reason why there is there is that proliferation of all those illicit activities in the past was because there was no regulation, right? And so there was no defined rules and regulation and those sanctions that would apply if your platform exposes consumers to those kinds of fraud without the necessary things or security measures in place to protect customers. So right now with the regulation, this is going to, players would have to align with the precepts of the regulation, and the SEC is extremely heavy and very involved in trying to protect consumers, basically. So as a responsible player, you would definitely need to ensure, you would necessarily need to up the ante with respect to security measures to protect your consumers and also your investors, basically. So in the long run, regulation and licensing also definitely would have a huge significance for the risk of fraud in the industry. And basically, so as the business is getting smarter in terms of preventing fraud, the fraudsters and the bad players are also increasing their own efficiency. But at the end of the day, it is going to be a continuous effort to ensure that consumers are always protected on responsible platforms.
Right. So what should policymakers focus on next? Is it licensing, taxation, consumer education, or innovation? What should they be looking at now?
I think it's everything. One, you cannot sacrifice one for the other. I think it's everything. It's the taxation, it's the regulation, is to ensure that regulation is not stifling innovation. And that's what I love about this SEC. They've always in the DG has always flagged to the industry that the regulation is not in place to stifle innovation, and there's been a lot of open-mindedness with respect to how the regulators have approached, particularly the SEC has approached the industry, and I think that would continue, right? So it is to focus on innovation, is to understand and learn the new things that happen or the innovations that happen in this market. It is to create an enabling environment to allow businesses to thrive in this market. So taxation, innovations, policies that support consumer protection and also do not stifle innovation are the things that the government and all the stakeholders with respect to regulations to focus on from a policy perspective.
All right, I guess at this point we'll keep tracking Nigeria's journey when it comes to cryptocurrency, digital assets, stable coins. There's just so much to unpack there. But thank you so much, Otedola Alabi, CEO, Luno Nigeria. Thank you for coming on this morning.
Thank you for having me.
All righty then. Let's take a moment now. We'll find out what's happening in the global economy.
Good morning to all our viewers around the world. Here in Nigeria, we're starting the week, the second week of July. First of all, with the expectations, what to expect around the major global markets, and starting first with today, the US ISM Services PMI, as well as the S&P Global Final Services PMI report, which is expected to be released later today. Now, according to the upcoming data, the services sector is expected to remain in the expansion territory, and that's despite a slower momentum. So that will be later today. We'll keep our eyes out on how that number comes out. And then on Tuesday, the North Atlantic Treaty Organization, that's NATO, is holding its defense summit, which will be holding in Turkey, Ankara, Turkey's capital. And that summit begins tomorrow and will continue into Wednesday, July the 8th. Now, the defense and defense adjacent equities will be in the spotlight. Now, the market is anticipating structural announcements regarding fresh defense spending cycles and potential rollout of tens of billions of dollars in defense-related contracts. Now, defense stocks have enjoyed a bumper year so far this year as conflicts from Ukraine to Iran increase the demand for munitions across the world. Now, for Wednesday, the markets around the world will be expecting the Federal Reserve's June FOMC meetings. Now, that's the week's biggest event. Now, investors are looking for clues on the timing of the next U.S. interest rate meeting and the move that the policymakers will be making, as well as the outlook for inflation. U.S. Federal Reserve will be holding the meeting later this month, July the 28th and July the 29th. That's 2 days. Now, on Thursday, we move over to China, where China's June Consumer Price Index report is expected to be released. And our market analysts and economists are currently forecasting that China's annual CPI would have risen by roughly 1.1% to 1.2% for the month of June. And then on Friday, Europe's biggest economy, that's Germany, the June Consumer Price Index of that country will be released. So now the final results will be released by the German Federal Statistics Office, also known as the Status, on July the 10th, 2026. Now, the preliminary flash estimates for June will show that Germany's annual inflation rate will be cooling to about 2.3%. So that's some of the things to expect around the world for the better part of this week. Now let's move over to what's happening at the moment. We're starting off with a British low-cost airline, EasyJet, which has reached an agreement in principle with a U.S. investment firm over a potential takeover of worth around $5.2 billion. Now, however, this does not mean that the deal has been confirmed. Now, that company, which is called Castle Lake, now needs to get regulatory clearance and approvals, which is required for the transactions to go ahead. Now, the London-based airline had previously rejected 4 takeover offers from US-based alternative investment firm Castle Lake, which owns a stake of about 2.14% in the carrier, though it manages the funds of that low-budget airline. Now, the low-budget carrier, that's EasyJet, has until August the 3rd to either announce a firm intention to make an offer or say it does not intend to do so. Now let's talk more about U.S. markets, but this time it's about a defense heavyweight, Lockheed Martin, which is leading the race to buy naval defense group Ultra Maritime. Now, according to sources, the deal to acquire Ultra is roughly about $3.5 billion. Ultra, which is owned by U.S. private equity firm Advent International, is a prominent defense contractor which specializes in anti-submarine technology such as undersea warfare, tactical communications, and mission-critical systems. Now, the company makes radar and electronic warfare systems, as well as torpedo defense countermeasures. Now, Lockheed Martin, which is making that proposal, is one of the world's largest defense firms, producing planes such as the F-35 Lightning II fighter jets and munitions like the Patriot air defense missile. Now, from defense, we go to Germany. Well, we talked about Germany before, but this time we're talking about the Germany's manufacturing orders, which rebounded strongly in the month of May, and that it increased by about 1.9% month over month, and that's according to official data published by the Federal Statistics Office today. Now, this This increase it exceeded the market's expectation of a 1.2% gain and reversed downwardly revised 3.2% decline in April. And it also offers a relief to the economic shock from the US-Iran conflict, which is already beginning to fade. Now, the rebound in Germany's industrial order comes as the effects of the conflict in the Middle East on Europe's biggest economy begins to fade in April, and then the economic data declined by 3.2%, revised higher from 3.8%. However, analysts say that despite the positive momentum, structural issues are preventing a full-scale industrial boom for that country. Now let's move over to South Korea, where in its push for developed market status, the country has launched a 24-hour onshore spot dollar-won trading, and that marks one of the biggest exchange reforms in decades. Now, effectively, the currencies market for that country now operates from 6 a.m. Monday to 6 a.m. Saturday Seoul time. That's in South Korea, and it's also entirely replacing the previously weekday 2 a.m. cutoff. Now, this means that registered foreign institutions and offshore firms can now participate directly in the onshore market rather than relying on offshore non-deliverable forwards (NDFS). Now, the round-the-clock shift is part of a government's broader liberalization push to modernize the financial sector and boost the country's currency. That's the global accessibility. Now, the won, which is the country's currency, has rebounded from its weakest level against the dollar since 2009. And now let's talk about Vietnam. The country is stepping up its fight against the thriving black market for counterfeit luxury goods. And this comes as authority intensify raids on markets, warehouses, and online sellers. Now, the crackdown targets a multi-billion-dollar trade that has long made the Southeast Asian nation a global hub for fake designer brands amid growing international pressure to strengthen intellectual property enforcement and protect legitimate businesses. Now, the raid, which led to the seizure of goods worth about $76,000, was part of a crackdown on black market industry that has thrived in the public eye for decades. Now, widely recognized as a global hub for cheap knockoff of luxury goods, Vietnam is home to some of the biggest fake designer markets in the world. And now, under mounting international pressure, authorities are on a crusade to rid the country of that reputation. Now let's talk about pharmaceutical companies. Swiss pharmaceutical giant Novartis has agreed to acquire UK-based cancer biotechnology from Myrix Bio for up to $1.5 billion. And this comes as it seeks to expand its portfolio of next-generation cancer therapies and reinforce its position in the fast-growing oncology market. Now, the acquisition gives Novartis access to Myrix's experimental cancer drug technology. And finally, let's talk about the media industry where we're actually operating now. But in Britain, British broadcaster ITV is reshaping its media business with a major divestment deal. Now, the company has agreed to sell its broadcasting unit to Sky, that's its rival there, for up to £1.6 billion in a move aimed at sharpening its focus on content production and streaming. Now, the transaction is expected to strengthen Sky's position in the UK's broadcasting market while reflecting the growing wave of consolidation against the global media industry. And that's global news and global week expectation. I'll see you later at 1:30.
All right, thank you so much, Anita. Well, there's a new trading week, and we see markets already moving globally and also here. NGX up about 0.44% so far. We're seeing financial services stocks getting attention this morning, likes of GTCO, Zenith, First Holdco, UBA, Access, and some insurance names. Also, Bitcoin down about 0.24%. Gold is looking good, up about 0.70%. Silver looking much better, 2.16%. We'll give you more updates at 1:30 what's driving markets so far. Thank you for watching Business Morning this morning. I'm Ladi Williams from the team right here at Channels HQ. Bye for now.